Hi everyone, I am Jayakumar, and in this video, let's see what happened with the FIIs positions in index derivative segment. So before that, let's see what happened with Nifty in the last few sessions. So on 28th October, the closing was around 17,800 around. That was the closing, and on 31st October, so Nifty had a gap up opening, and it there was a resistance in the previous week around 17,800. So it straight away jumped above this resistance range and moved towards 18,000 and above that. So if you see the last few sessions, so index we had discussed the earlier video that Nifty may move towards this range. That range was 18,000 to 18,100. So it's almost reached the range, and it has been on a consolidation mode at higher levels in the last few sessions. So the closing as on November 4 was around 17,000, 18,117. So that was the closing. So now let's see what happened with the FIs positions, open interest positions. So on previous weeks, the longs there was longs were little less, and the short covering happened on the expiry day, that is on 27th October. If you see in the percentage terms, before that, shorts were dominating, right? And on expiry day, there was a covering of the position. They allowed to expire the positions, short positions, and suddenly the long total longs moved to 59 percentage. So they have been dominating in the last few session longs. See, it is above 50 percentage. Okay, so this 59 percentage long means the rest is short, that is around 41 percentage. So from the 27th October, if you see continuously, the long positions are more than short. Okay, so here 59, 57, 63, 66. So most almost all day the longs were total longs were dominating. Okay, so if you take into consideration the daily percentage change after the expiry, that is new contract, November contract opened, there was some both mixture of both short and longs were there, but overall the dominating were longs were dominating. Okay, because it is more than 50 percentage. So if you see on this day, that is on 28th, there was some short because buy orders were low and open interest was positive, so some shorts, then there was a short unwinding. Then in this particular day, that is on November 1, there was a heavy long build up, 12 percentage up. See, it went to 66 percentage total index long percentage. Then Nifty moved towards this resistance zone, that is 18,000 towards 18,200, what we saw in the charts, candlestick chart. So thereafter it lost some power, bulls lost some power, and they were unable to move beyond this 18,100 to 18,200 range. And the next day there was some booking, profit booking, that is long unwinding happened. And in the last 2 days, that is on 3rd November and 4th November, if you see, there are buy orders is low. Okay, 44 and 48. So the buy order 44 means 56 is the that is sell orders, right? And here 52 is the 52% is the sell order, buy order 48, and the rest 52 is the sell order. And there was a upward movement in the open interest. See, so it can be treated that some shorts are building at higher levels. Higher level means it may be above 18,100. It is 18,100 to 200 range, right? So they have created because of some they may expect some volatility at higher level. So they have created some short position. FIs have created some short position. But even though they have created some short position, the overall domination is of longs. You see, it is above 50 percentage. Only if it slips below 50 percentage, then shorts will be more than longs. Okay. So as of now, that's not the case. Even though there has been a rise in short position the last two session, the longs were maintaining above 50 percentage. On as on Thursday it was 59 percentage, and it was a drop of just 1% on Friday. It's 58 percentage. Okay, so this is the scenario. And if you see call writing, it was about call writing should be less for the market to move up. If you see here it is 46%. It dropped on Thursday, but again moved above 52%. And the buy orders, daily buy orders were low. So based on all these factors, the last two sessions, we can say that the 18,100 to 200 range will be some resistance. So market has to open and hold above 18,200 for any further break towards it may move above its that is 18,400. Next range will be 18,400 to 18,600 range. So the market has to open and hold above this range. That is, if you see the highest point was registered on 2nd November, and the high point was in spot 18,179. That was the high. So if it manages to break and hold above 18,200, then we can expect their next leg of uptrend may start. That next resistance would be around between 18,400 to 18,600. But on the downside, assume that it failed to move or hold above this level 18,200, then we can expect some consolidation. So if we see the low on 3rd November, it was 17,960. So if it breaks this and hold below this range, then Nifty may come towards 17,800 to 17,700 range. So what are the things we have to watch for the week in respective of open interest means buy order should be more. If you see the last three trading session, buy orders were below 50. Okay, if this moves above 50 and index long percentage maintains above 50 percentage, if it maintains above 50% means even if there is a fall, there is a possibility of a bounce back, fast bounce back. Okay, and this either unwinding short should be unwinded or fresh long should be added. So you have to watch these three things. First, the index long percentage should maintain above 50% and buy order should be more. It should be more than 50%, and there should be either short unwinding or fresh long should be added. So if these things happens on based on FIs position in index, we can expect index to move to the next. Next momentum will be created above 18,200. But if fail to happen and there may be some volatility, then we can expect some consolidation phase for the Nifty. So let's see how the market will be in the coming days. Thank you and have a nice day.